Hello and welcome to Morning Trade on Moneycontrol. I'm Stacy Pereira and I'm here to help you navigate through the trading day with some actionable trading strategies, sectoral trends, and also, more importantly, your queries during the course of the show. So guys, keep commenting on our live feed and we'll have them addressed by our guest on the show. But before bringing you that, let's see what's making global headlines as well as the handover we're getting from the Asian markets. Now, Asian markets are largely lower on this first trading day of the year for them. Remember, they were closed as of yesterday, but China's December manufacturing PMI, that's the one that has come in, reflecting further contraction. The GIFT Nifty too is implying a lower start for the Indian markets. Now, crude oil, those prices have risen. They've gained about 2%. Brent crude crosses that $78 a barrel as trading resumes after the New Year's weekend holiday. Gold too gains and holds about $2,000 an ounce. And TVS Motor sales surged nearly 25% in December, with two-wheeler sales growing as much as 27%. Royal Enfield, on the other side, sees overall sales decline by 7%, while exports are down nearly 29%. And Japan dropped its highest level tsunami alert issued following a series of major earthquakes yesterday. Officials also confirmed 8 deaths so far, while flights and rail services were disrupted. Thousands of homes remain out of power. And among stocks in focus today, we have Coal India, Bharti Airtel, and a couple of auto names like Eicher Motors, as well as Tata Steel that will be in focus. Well, what can we say? It was yet another day of consolidation and range-bound session on the Lal Street, the Nifty 50, really trading pretty much flat on the first day of the year. Now, the index, though, hit that new high, we could say, during afternoon trade, but almost failed to hold on to those gains. And we saw a lot of profit taking in that last hour of trade. And that perhaps is going to be pretty much what we're going to see through the week, at least what market experts believe, that we are in that range of 21,650, which is trying to be held, at least that being the support level. In fact, after touching those highs in that last hour of sell-off that we saw, that really got us down to back again to those 21,600 levels. So we are hopeful that that 22,000 will be seen on our screen soon, but looks like, we're going to have to wait for that for some time. And so is the trend with the Bank Nifty too, which remained quite under pressure in yesterday's session, was down and about, but 48,000 is that mark even for the Bank Nifty. So let's see what the charts are really telling us right now, and let's understand this on how this can really turn around for trade. And joining me to do that is Sacchitanand Uttekar. He's the Vice President of Research at TradeBulls Securities. Very good morning, Sacchitanand, and a very happy New Year to you. Let's understand what the charts are telling us first for both the Nifty as well as the Bank Nifty. Are we likely to see some bit more of consolidation or correction before we see another uptick in both the indices?
Good morning, Stacy, and wishing you and all the viewers of Moneycontrol a very happy and prosperous 2024. Well, the outlook on an immediate basis remains consolidative, as you rightly said. 21,650 has been acting as a very good support. Now, this is where its 5-day exponential moving average is placed when it comes to Nifty, and it has been holding on to this particular support really well. Even if you look at the options data and the cluster there, 21,600, the put writing has been very confident. So I think we have major, indications that for this particular week itself, 21,600 may serve as a very strong support, and any pullback towards these levels would be again a good opportunity. On the higher side, yes, we are facing some bit of pressure when it comes to 21,800, 850 cluster, wherein the Nifty is facing some, profit booking pressure. But if you look at the overall, weekly clusters, there's a good chance that Nifty could trend towards 22,000 eventually, which is the psychological resistance that we are seeing going forward. But if you look at the major trend will only change in case 21,470 is breached on a week-on-week basis. So I think the probability of that getting, unfolding remains very bleak. So I think this entire consolidation phase for the last two trading sessions has been really healthy. We may see Nifty oscillating within this particular band of 21,600 on the lower side and 21,850 on the higher side. But eventually, we see that the Nifty could scale towards 22,000. So I think the strategy remains on buy and declines for the day. At least one can keep a stop loss somewhere close to around 21,540 in case Nifty slips towards 21,680, 650 kind of zone. That will be a good value buy zone. And on the higher side, we may see some resistance at 21,850.
Right. So those are the levels there for the Nifty and the Bank Nifty that we can, track for the trading day at least. But do stay on with us, Sacchitanand. Let's look at the fundamental side of the story. And, we are seeing pretty much the macros stack up in favor of India. We had GST numbers that came in yesterday, another seeing a good rise there in those collections, the mop-up being quite positive. We're seeing auto sales numbers now, those being a little bit of a disappointment, and we'll get to the numbers in a bit. But overall, the picture looks really great, at least in terms of the macro. So let me bring on Mayuresh Joshi to talk about the fundamental story. Well, India seems quite the bright spot, and we've been saying this for some time now. But what could be the likely headwinds now that we're getting into it? Yes, we have an election that is coming up, and not just in India, but across so many countries, which is going to have a bearing as well on how things turn out. And of course, there is going to be that market sentiment. Now, we've got a couple of factors that we've already priced in, be it the Fed rate cuts as well as political stability or instability that could really change the picture. But what else could really give markets really that push at this point? Because we are, looking for that trigger. So what could that be according to you?
Morning, Stacy. Let me first of all wish you, the entire team at Moneycontrol, and all the viewers of Moneycontrol a very happy, healthy, and a prosperous 2024. Having said that, and the macros that you pointed out are looking very, very good in favor of India at this moment. Apart from all the factors that you probably spoke about, the corporate debt to GDP has come down drastically in the last few quarters, and that gives a good leeway for growth. In this scenario of rate cuts coming through, both at the global and a local scale, which can support growth and earnings quite substantially. The financial stability report that RBI has put forth, GNP is at 3.2%, net NPA is at 0.8%, are also indicating for the robustness that our banking and financial system has to present itself. And therefore, from a macro perspective, India stands out not just within the emerging pack, but within the developed pack as well, as far as growth and numbers are concerned. What can really give a push to the markets henceforth will largely be how earnings play out, Stacey. Now, we'll start with Q3 numbers in a matter of a few days. And if earnings remain supportive and constructive across a large part of the market, my sense is that the strength for the Indian markets will then probably continue. A few of the growth-oriented sectors that the markets expect to continue their earnings momentum can also get a fillip in terms of how the government capex will play out. And it has played out wonderfully well so far. Any push through in terms of any interim budget figures for this will also aid a significant amount of macro and micro growth. So I think the next leg up will probably come from earnings, which will start to manifest.
Right. So earnings is what we can look forward to. In fact, yes, a lot of those updates are trickling in. And from next week onwards, we are going to see those numbers as well. But let me go back to Sacchitanand and get his view on how metals are really doing, because there is a note from Jefferies that has come out, and they've pretty much upgraded most of those big metal counters. Now, if there's an upgrade for JSW Steel, raised the target from 800 to 800 from 700 before. Coal India as well, and there are some numbers coming in for Coal India also. They've upped the output there. If you look at Hindalco, they've also raised the target for most of these bigger names, Tata Steel as well. Now, they said after that tough year of FY23, they are cautiously optimistic about 24 and positive on metals. That macro backdrop that we're seeing, as that has turned positive. They're looking at a 6 to 15% volume CAGR over FY24 to 26. As for Coal India, Tata Steel, JSW Steel, all of them, they're looking at an EPS for FY25-26, and that estimate somewhere around 19 to 21%. So those look quite promising. But then we saw the similar play out last year as well, where metals were pretty much, the ones moving the benchmarks higher. But is there some bit of change that has happened now, especially with China numbers and what we're seeing come out from there? Because that really has a repercussion on the whole metal pack. What would you say, Sacchitanand?
Well, the entire metal pack has been buzzing. In fact, the way we saw that rapid move from 6,800 towards 7,800 on the Nifty metal index, it has been very strong and very vibrant. So after that, probably, it is a good idea to wait for a correction and then get into, aggressive long positions. As of now, we don't see any major change in trend. But it has always been, historically proved that whenever such news flows come in, this particular sector gets vulnerable, and then it does provide an opportunity to get in. So I think for the last 7 trading sessions, the index has been scaling higher. But if you look at its daily RSI, it has been displaying a negative divergence. So I think one should wait for a pullback, to build some aggressive long positions. But chasing momentum within this particular space may not be a healthy strategy. And on the higher side, eventually we may see this particular index scaling towards 8,300, 8,500 in a couple of months' time. But as of now, I think it's better to wait for a pullback. The ideal zone, cluster zones are somewhere close to around 7,600, 7,680. Any pullback towards that, and one can be aggressive.
Right. Well, let me go back to Mayuresh then and ask him about the sectoral trends that he's seeing that will be the highlight for 2024. We know we are pinning hopes on financials being that outperformer. There's also auto names that, could really surprise us. We saw Tata Motors being that really bright star of 2023 at least. So which would be those sectoral bets or the themes that Mayuresh, you would play out in 2024?
So I think auto ancillaries, as you pointed out, Stacy, is something that will continue doing well, because the entire transition that is happening from internal combustion engines to electrical mobility, a lot of these auto ancillaries are well geared up, both in servicing the existing players as we speak right now, and building on capacities for the new electrical mobility platforms that will come through at some stage in the next few quarters. Along with that, the replacement market is holding up pretty well, both from a pricing perspective for all these players. And this entire transitionary aspect should benefit the auto ancillary space. The other space, as I mentioned in my opening remarks, the government capex expected to continue. Private capex should also start happening in real earnest in the next few quarters. And therefore, capex, capital goods, domestic cyclicals as a theme might and will continue doing well as far as earnings and the entire earnings perspective is concerned. Within the broader markets, we remain a little bit more sanguine and selective in terms of selective names, because valuations and late-stage cases, as we see at Markets with India, are genuinely playing out. Therefore, remaining a little bit selective within the mid-cap IT space and a large element in terms of some financial names, which will continue doing well, both from the private stroke public counterparts as well as select NBFC names. So I think a few of these spaces should continue doing well, in my opinion. And let's not forget some part of consumer discretionary, because as consumption comes back very, very strongly, few of these consumption discretionary stocks might start doing well from the first half of the next financial year. So I think keep a view on these broad themes, which can do well and hold up as far as earnings are concerned.
Well, thanks for that, Mayuresh Joshi there from William O'Neill giving us his picks. It's financials, auto ancillaries is top of his list, and also consumer discretionary is what he says you could be looking out for. Thanks so much, Mayuresh, for your time, and a very happy new year to you too. But let's get a couple of queries answered now. Sacchitanand is joining us for that. Let's take up one of these, which is asking me about the cement pack as a whole. In fact, we discussed cement yesterday as well, because there were notes from Jefferies, and they're saying that could be one of the sectors that look quite promising, most of them upping their capacity for 2024 as well. So a broader view on the cement sector as well as Star Cement.
Well, the entire pack has been trading well. In fact, every now and then we get an opportunity on the declining side that opportunity is bought in. And the trend structure for most of the cement counters remain healthy. When we look at the chart structure of Star Cement, definitely if you look at the broader scale, it has been forming higher base. The immediate base is somewhere evident at around 165. So unless we don't see the stock closing below or trending below that same, there may not be any major change. On the higher side, the recent pullback that we saw towards 165, 170 zone again reaffirmed this particular base, and the recovery has been very gradual. The moment the stock starts trending above 183, 185 zone, we may see another cup and handle formation, which is a continuation pattern, indicating a further price move towards 205. So I think the overall major structure remains healthy. Any declines on the lower side should be utilized to create long positions. And from a momentum perspective, 183 and a breakout about the same, we may see this particular stock scaling towards 205.
Right. There's also another query by Ashokan P, who's asking your view on Thyrocare Technologies, and he's saying he's asking whether it's the right time to enter, at least for short-term trading. So, what would you say to that one, Thyrocare Technologies?
Well, the recovery has been very steady. In fact, for the last few trading sessions, we have already seen the stock, displaying a decent correction. It is back towards its 20-day exponential moving average support, which is placed somewhere close to around 630 mark. So I think this zone itself, looks dependable. One can create some long positions here. Stop losses can be placed at around 595 on a closing basis. And on the higher side, we may see this particular stock, again scaling towards 760, 780 kind of zone.
Right. Let's also get a couple of stocks that will be a buzz in trade today. One of them being Bharti Airtel. Now, this one, because the subsidiary has gone on to acquire a 97.1% stake in BTEL Teletech. Now, this, remember, is part of the group's restructuring process, and being a subsidiary of Bharti Airtel Services has gone into this agreement to an acquisition of almost 45,239 equity shares, this representing about 97% stake in that Bharti Group company. Remember, BTEL Teletech, that one has also a 49% joint venture stake in two other manufacturing facilities, which also produce telecom and networking products, and they could also be qualifying for the PLI scheme. So that is quite interesting, and we are likely to see that a buzz in trade. But coming back to the auto names and what the December sales data has really thrown up. Now, if you look at Eicher Motors, and that one also being one of the biggest laggards in yesterday's trade, we did see how they have got a notice as well for GST demand that has come across, and which is why that stock really came under pressure. But when you look at its December sales number, there too a little bit of a disappointment, one would say, because they managed to sell just about 63,387 motorcycles in December. Now, this was down by 7% versus the 68,400 in the year ago. Whereas if you look at the export side of things, which is quite a big decline that we're seeing of almost 29% coming in there for Eicher Motors. But on the other side, on the contrary, we did have TVS Motors, wherein the 2- and 3-wheeler company has recorded a monthly sales of 3,01,898 units in December. This is a growth of almost 25% that the company is seeing. Even their total exports, in fact, have grown by 8% on a year-on-year basis, coming in at 85,391 units for December. So those are a little bit of divergent numbers that you're seeing from two of the players in the auto pack. But let me bring on Sacchitanand once again to get his views and what would be his picks within the auto as well as auto ancillaries, because that is something that are quite a buzz in trade.
Well, within auto, especially the two-wheeler space, we still remain optimistic on Eicher Motor. In fact, the stock has been consolidating here within this band of 4,200 on the higher side. And on the lower side, it has displayed a good, strong support zone at around 3,900, 3,940 kind of a zone. I think here declines could be healthy. One can create long positions here. Eventually, we are expecting that the stock could scale towards 4,460. So a buy and decline strategy continues when it comes to Eicher. Something like a Bajaj Auto, which has already seen a vertical rise, we may see some profit booking here. There are signs of a negative divergence on its daily RSI, and that's why the support level at around 6,700 becomes very vulnerable. The moment the stock starts trending below 6690, we may see a very strong pullback towards 6400, where its immediate base is placed. So within this particular pack, these are the two opportunities. From the ancillary space, Excite Industries recently, displayed a very strong breakout from a rounding bottom formation on its large long-term scale. It has surpassed and it has been sustaining above its 2018 highs, which are placed around 300. So even here, I think the pullback would be very healthy. Any declines towards 315, 320 kind of a zone would be utilized or should be utilized to create long positions. If you look at the entire pattern structure, on the long-term scale, it is displaying a move towards 460. And from a trading momentum perspective, we may see, the stock scaling towards 345, 346 zone. So I think here declines should be utilized to create long positions and keeping a stop loss summit close to around 304 on a weekly closing basis.
Right. So those are some interesting picks you have even from the ancillary space if we speak of. But let's get in another query where Raghav Sood is asking whether he has already in fact bought Sumitomo Chemicals, and he's bought this as an average of 443. He's asking whether you should book his losses or stay invested.
Well, the trend has been more on the negative side. Recently, the stock has displayed some consolidation. The base is right now evident at around 400. So in case if the stock starts trending again below 400, then definitely you should exit. But on the higher side, it has made a couple of attempts to surpass its 200-day exponential moving average, which is placed at around 416. If you look at the daily RSI, and the price action, which is narrowing down, is showing a sign of a symmetrical triangle formation, which may help the stock, scale above that hurdle of around 416. So as of now, I think he can hold on to his long positions. Probably from a momentum perspective, he can add on to his longs, keep a stop loss at 395. And in case if the stock, starts trending confidently above 416, 420 mark, then we may see this particular stock, displaying a very strong recovery towards 465, 470 zone. So he can hold on to his long positions, probably add a few more, keep a stop loss at 395 on a weekly closing basis, and review his position once the breakout at 416 is evident.
Right. So hold on to those long positions at least is what Sacchitanand is suggesting when it comes to Sumitomo Chemicals. Let's also address a couple of PSU stocks, and one that will be a buzz is likely to be LIC. That's because Life Insurance Corporation of India has received a demand order almost to coming to the likes of 806.3 crore rupees. This with the collection of GST along with the interest penalties that has been levied by the Maharashtra State Deputy Commissioner of State Tax. In fact, that is coming in from Mumbai, and this, remember, is a demand order cum penalty notice which dates back to FY 27 to FY 2017, I beg your pardon, to 2018. This including, if you look at the breakup of what this 800 odd crores demand is, the GST is of 365 crore as well as the penalty coming up to 400.77 crores. So LIC is likely to see some bit of pressure there after getting this demand notice from the GST here in Maharashtra. But another reason why it would be in a buzz, that could be because LIC has gone on to increase its shareholding in Asian Paints by about 48,652 equity shares. This now changing their shareholding structure to getting it up to 5% for the paid up capital in Asian Paints. So that's why we're going to see a little bit of traction there in LIC as well as Asian Paints for that matter. But let's go back to Sacchitanand and ask him his view on PSUs as a whole. We are getting into an election here, so we are likely to see a lot of action there within PSUs. But what would be your picks if you had to take one, and from which sectors within the PSU? Would it be defense? Would it be something like fertilizers and chemicals that come a buzz, especially during closer to the budget? What would be your picks within the PSU pack?
So if you look at the PSU segment itself, banks are something which are still trending strong, and we are of the opinion that eventually the PSU bank index may scale towards 6,400. So a lot of stocks are buzzing there, but we would stick with the leaders here. SBI has displayed a very strong consolidation breakout in the month of December. If you look at the overall structure, it is indicating a price target somewhere close to around 715. So I think the declines in this particular counter should be utilized to add up to long positions. We've already seen a very strong vertical rally from the base of around 560 towards 660, and probably a pullback towards 620 is something which is still pending. So any declines towards 620, 630 kind of a zone should be utilized to create long positions. So from this space, especially from the PSU banking space, we are optimistic on when it comes to SBI. The other space that we like is a stock like HAL. Definitely, we have seen a very strong vertical rise here. But if you look at the weekly and the monthly RSI, despite of the fact that the stock has been in a very strong secular bull run, there are no traces of any diversion in strength. The stock has displayed a very strong consolidation here. The base now looks elevated at around 2,600. The consolidation band is again, maturing into a bullish flag formation, which is again a continuation pattern, which is indicating a price target somewhere close to around 3,480. So I think this is another stock wherein some long positions on an aggressive basis can be deployed. Keep a stop loss somewhere close to around 2,540 on a weekly closing basis, and positions should be reviewed once the stock starts trending above 3,400.
Right. So SBI and HAL are the picks from the PSU pack, at least from Sacchitanand. But before we let you go, Sacchitanand, do give our viewers your top picks, or which stocks will be on your radar for today.
So for today, I think Tech Mahindra, especially the IT space, we may see some positive flows there. And if you look at the structure of Tech Mahindra, we've already seen a good, healthy consolidation here. 1,300 has been acting as a good support zone. Any declines towards this particular level should be utilized to create long positions. 1284 would be the stop loss from a trading perspective. And during this particular week, we are expecting that the stock could scale back to around 1340, 1360 kind of a zone. So a long call on Tech Mahindra. Another space which has been trending well and which has displayed a good consolidation in last two trading sessions is MGL. Even here, any declines towards 1,200 would give a good trading opportunity. The stop loss could be placed at around 1196 on a closing basis. We are expecting that this particular momentum may again resume and push the stock towards 1246 on a trading basis. This is the level that we will be watching out for. But positionally, we expect the stock to scale towards 20.
Right. So Tech Mahindra and MGL are Sacchitanand's picks. Well, that's all the time we have on this edition of Morning Trade. I'd like to thank Sacchitanand once again for giving us his time and the picks and his calls for the day. And I hope that was useful to all our viewers, as well as the queries that we managed to take up. But don't be disheartened if we haven't, because we'll be back tomorrow and hopefully we'll get all of your queries answered. But do stay tuned to Moneycontrol, because coming up next is Opening Bell.